Yo, 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 what's the dilly? Yo, listen, man, this could potentially be one of the most important videos you watch. All right. In this video, I'm going to be talking about how to market the stock market. You got to stop listening to what they're telling you because what I'm going to show you is almost the opposite of what they're telling you. Stop listening to the news. All right. And I'm going to also show you how everybody who's a trader got bear trapped today. All right. Everybody got bear trapped. All right. This is why people is getting put in the blender. This is why people is losing money. This is also why people is becoming what? A smoothie. All right. Stop going to Smoothie Avenue and getting blended. All right. This is so important. So let's go. Let's get into it. So basically, so on Friday, we had a sell-off, right? On Wednesday, this coming Wednesday, Trump got something that he's calling Liberation Day, right? So he's saying that the market is gonna, explode in whatever way because he's gonna make the economy better, right? With the tariff situation. He's gonna be putting tariffs on a lot of things. But today, the whole stock market was red when we opened up, right? Before, when I woke up and I did my stuff and I looked at the charts, whole market was red. Now, let me show you what happened. This is why I tell you guys, wait for the first 15 minutes before you enter into a trade. Sometimes 30 minutes, but wait for the first 15 minutes, all right? I did not take a trade today. Why is that? Because I see what's going on, all right? Now, let's start with this. Stock market gaps down today, right? What is a gap down? A gap down is when the stock closed at $100 and then it opens up the next trading day at $90. That means it gapped down, okay? So the stock market gapped down today, all stocks, all right? And then what happened was it consolidated for 2 hours. That's a finesse. That is a finesse. So let me go in and let me show you exactly what happened. And this is why you need to be patient in the stock market when you trading. Now let's go into the charts. All right, so let's look at SPY. Right now, SPY is at 554, right? Now, if we look, this is on Friday's trading session right here, right? Friday's trading session. Okay, so on Friday, the SPY closed at 555, right? 555. Now, on today, the SPY opened up at 549. So it was down. So everybody was scared, right? Everybody was scared, right? You see that first candle on the 15-minute, that first 15-minute candle, red. It came down to 547. So everybody thought that the market was going to keep going down, keep going down. So they get in right here. This candle goes down a little bit more. And then what happens? Whoop, it reverses, right? This is what we call a bear. All right, got trapped. And now, so you in a put, it reverses. You like, it's a red day. It's going to keep going down. And then look what happened. It go up, right? Let's look at QQQ. Same thing. Gap down, right? Gap down from 468 to 461. Gap down. Boom. Came down first 15 minutes. And then what? What'd it do? Went up. You see this wick right here? This wick right here is what they use to make you think on a new candle that it's going to keep going down. So you're like, okay, I'm gonna get in a put. And then what does it do? Reverses on you, right? So that's QQQ. Let's look at Apple. All right, Apple pumping right now, right? But let's look at it. Opened up, 15-minute candle. It wicked down, and then it came up, but then it consolidated for 30 minutes, almost an hour. And so it looked like it wasn't doing anything, right? I had Lululemon on my watch list. They came up a little bit, and then they came down. So they just been consolidating all day. Let's look at Hims, right? Came down, fake people out. I said if it dropped below 27.19, I would get in a put. It did not. But some people got in on puts. Came back up, right? Now it's kind of consolidating. This looks like a bull flag. Alibaba, right? Red candle, boom, right? Gap down, boom. And then it came back up, consolidated a little bit. It's not really doing too much today, right? Reddit, I had this on my watch list. Look what happened. Big red candle, boom. And then what does it do? It reverses, right? This is a tweezer right here. And then it comes back up to the upside. MU, let's look at MU. Same thing, gap down, came down, and then it came up, but now it's consolidating, right? Robinhood, gap down, and then the new candle opens up, comes down, and then it comes up, and now it's in a bull flag, right? Look at Tesla. Tesla, it gapped down, boom, red candle, boom. Are you guys seeing the pattern here? All of the stocks did damn near the same thing. It bear trapped everybody today. And so many people lost so much money today, and so many people are sick, right? But there was a lot of consolidation going on today, all right? There was very few stocks that just ran up today, right? Look at Meta, right? Gap down, boom, came down, came back up, consolidated. Now it's on the upward move a little bit, all right? These are all bear traps. Now, why am I saying this? It's extremely important to not get faked out and be overzealous on a stock, right? So when a stock gaps down, especially if it's the whole market, man, you better be patient, because what happens is you have a gap down, right? So the stock drops $5, $7, $10, $20, depending on the stock. And now you think that the whole day is just going to be red. So the average trader is going to predict and front run a play. They get in a put, right? It may be up 5%, 7%. And then what happens? They get out. I mean, they stay in because they want more money, because they like, it's going to be a red day. But when you understand that all of the moves that we would have traded today happened overnight. They happened overnight. So basically, we gapped down a whole range for the most part with a lot of stocks. We gapped down a whole range. Now, here's the kicker part. The market ain't closed today. They might have a rally at the end of today to certain levels, and then they might have a green day tomorrow. We might have a red day on Wednesday or a green day. We don't know. But that's why technical analysis is so important, right? They'll be like, oh, the stock market is down X percent today. But what they're not telling you is the move didn't happen during the trading day. It happened overnight. So they the ones who crashed the market, and then they trying to make people think that the market is crashing during the day. The market ain't crashing during the day. The market is getting manipulated right now because it's the end of the month. I did talk about this on my live. It's the end of the month. It's the end of the first quarter. The beginning of the month is tomorrow, and the beginning of the second quarter is tomorrow as well. And we got Liberation Day on Wednesday. We got a lot of market catalysts right now. And so when you have a lot of market catalysts around the same time, you have a lot of market manipulation, right? When I was consulting back in the day, I was working with direct-to-consumer brands. It would be like the end of the month. If they were happy with their revenue, they was like, okay, we got a sale we want to do, but we're going to wait until next month to do that sale because we want our revenue to count for next month. You got to understand what's really going on here. And so a stock, they say a stock can only go one of two ways, right? But that's not true. Stock don't only go up and it don't only go down. A stock can go up, it could go down, and it could go sideways. And when a stock goes sideways, that is a nightmare for a trader. Because when a stock is going sideways and it's consolidating, you ain't got no real setups. And what people usually do is they try to force the setups. Now, I used to force setups. I used to be like, VWAP this and boom, 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 and this gonna do this and brrr, right? And then when I go brrr and I get into play, I get brrr because I get blended and I become a smoothie, right? You gotta understand how to play the game. If you see a big gap down or a big gap up in the market, them gaps are coming to get filled. What happened last week, last Monday? Stocks gapped up. We had 2 days of greenness, and then we had a crash at the end of the week. You see what I'm saying here? So if we had a crash at the end of the week, the crash came down, and all the stocks did was they filled the gaps. They filled the gaps where they came from. So if the whole market gapped down today, at some point in time soon, stocks are going to fill the gaps from where they just came from. This is the game that they playing. And also, this morning, volume was low. That's how scared people are of trading now. I looked at the volume. Let me show you what I'm talking about here. Let me show you what I'm talking about. If you look right here inside of your trading view, right, no matter what the stock is, you got something called right here. So look at Meta. The average volume is 16.74 million, right? The current volume is 11. This morning it was at like 7 million, right? SPY. Average volume 63 million. The current volume is 28 million. This morning it was way lower. Alibaba. Average volume is 31 million. Current volume is 7 million. That's why the stocks ain't really moving like that, or they're moving real slow. Right? Tesla. Average volume 114 million. Current volume 79 million. Right? When the market opened, stocks weren't going up and down like crazy because the volume was so low, because people right now are afraid of trading. When I did that, I was like, okay, I see what kind of day it is. And I was taking it real patient, because if volume is low, if I'm in a trade and I'm in the wrong side of the trade and volume picks up in the opposite direction, I will lose more money, because the higher volume is going to make the stock move faster. Right? These are the games that they play. And you got to be able to see what's going on. I always say, you are not smarter than the stock market. You're not smarter than the algorithm. You're not smarter than the billion-dollar institutions that are putting money in certain stocks to make them go up and down. Stop getting arrogant. Stop allowing your emotions to supersede what you see, right? Stop being emotional. Stop making emotional decisions. And I always say, lock in. Lock in. That's all you got to do, right? Stop allowing yourself to get taken advantage of because you want to hurry up and make money. Trading is not a get rich quick. You could get rich, but I always say, get rich over time, not overnight. You are not going to get rich overnight, but you will get rich over time. But in order to get rich over time, you got to trust the process, right? You got to put the work in. You got to study. You got to learn the stuff you need to learn. Don't just be getting bear trapped, right? Anytime stocks got up or down, I'll be hesitant, because I'll be like, I look at a gap like a magnet, right? That magnet has to, the stock going the opposite way, it's going to come back down to the gap fill at some point, because it has to balance out. The stock market is all about balance. If you understand that principle, it could change your life. All right? So if you got today, I want you to take a breather. I want you to write down what you're going to do differently, what your plan is. And tomorrow, I want you to come at it with a fresh mind. Don't worry about what happened. Have amnesia to today. And tomorrow, let's get it. Because after stocks consolidate and they kind of chop around, we're going to have a big move to the upside or the downside. That's how the game goes. All right? So I hope that this helped you. I hope that it blessed you. And always remember, Get out of your head and go get into this world, because your head is a dangerous place to live. And I always say, the more you study, the less you worry. All right? I'm going to holler at y'all in the next video. Peace.